In this video, I'm going to go through the solution to the inventory loss question, example number 3. This question is very similar to the one that I uploaded a video about during the week, so hopefully you may already have had a go at this question independently, but in any event, I hope that you'll be able to follow the process and the solution approach. So just to read the question to get the sense of it. So a warehouse was broken into on the 17th of February. Large quantity of stock was stolen and you're doing up an insurance claim and you've received the following information. So this series of bullet points constitutes the information available to us. So the closing inventories as stated in the last statement of financial position of the last balance sheet prepared at the 31st December 2018 were valued at a cost of 78,200. So as you hopefully recall from last video, this would be our opening stock this time round. So this is the stock that we had at the end of the last accounting year, which ended in 2018. And now we want to look at the 2019 year. So this, this would be our opening stock in our trading account. The value of the stock not stolen at the 17th of February 2019 is 6,800. So some of the stock was obviously not stolen and another portion was stolen. We need to figure out the total amount of stock that we had and then deduct 6,800 from it when we have that calculated. That will give us the estimate of stock stolen. So that is something that we will do at the very end of the solution. Payables at this date were owed 69,470. So at the 17th of February 2019, we owed our suppliers 69,470. Of this total, 56,000 was owed to suppliers of goods for resale and the balance was owed to other suppliers for services and non-resale items. So this is the important bit here, the amount owed to suppliers of goods for resale. So those suppliers are the ones from whom we buy goods which we intend to sell to other people, and in the trading account we need to figure out the value of purchases, the value of goods bought that we intend to sell to others. So this little piece of information is part of that process to calculate the value of purchases. It doesn't actually constitute purchases, it simply shows how much we owed. So obviously you could buy goods from somebody and pay them and you owe a little bit less than what you bought. So we need to work with that and with other pieces of information to figure that out. We'll do a creditor's control account, exactly the same as the last question. Details extracted from the cheque payments book for the period 1st of January 2019 to the date of the robbery are as follows. So total discounts 1,200, total payments 32,700, and these amounts are analysed as follows. This is very similar to the last question. So the important point here is that the suppliers of goods values are the ones that we are interested in. Okay, so of the 1,200 in discounts, 1,100 was from suppliers of goods and 100 was from other suppliers, and the payments were split 28,900 to suppliers of goods and 3,800 to other suppliers. So these two pieces of information will be put into our creditor's control account, and you'll see that when I go through the solution. Payables were owed 61,720 at the 17th of February 2019. So this is going to be a closing balance on the payables creditors account. So split between 50,820 owed to suppliers of jewellery and 10,900 owed to other suppliers. So this is the key piece here, the amount owed to suppliers of jewellery. It's closing balance on creditor's control account. Okay, gross margin on cost is on average 30%. So if we buy something for €100, we add on 30%, 30 euros to the cost to get the sales price. So gross margin divided by cost equals 30%. Cash lodged to the bank current account in the period 1st of January 2019 to the date of the robbery totaled 88,500. Okay, well this is going to represent sales, but there's that little extra piece like we had last day. Cash received totaling 2,500 had not been lodged, but had been paid out as casual wages from the till. So the sum of the 88,500 and the 2,500, that will represent our sales in the period. Okay, so the total money received is the sum of those two, which is actually 91,000. and you're asked to calculate the cost of the stocks which were stolen from the warehouse. Show all workings. So I'm going to switch to the solution, and here's the trading account. So we'll just reveal first of all the layout of the trading account. Now at this point in time you should ask yourself, do you know the layout of a trading account? What elements, what are the text descriptions that need to go into a trading account layout? So hopefully you should recall those: sales and cost of sales, opening stock, purchases minus closing stock. So cost of sales is consisting of these three items, and sales value minus cost of sales value gives you gross profit. So looking at the things that we can slot in from the question, okay, our first piece of information was opening stock, 78,200. Okay, so I can slot that into my solution, 78,200. Okay, so that's straightforward enough. Then the next piece of information, there's a series of items here about suppliers. So I'm going to do up a creditors control account, okay, suppliers control account, which is basically showing the total invoices we received from suppliers and the total payments and discounts that we made to them. So we can do a calculation, do a creditors control account for that. Okay, so 56,000 was owed to suppliers of goods for resale at the end of December 18. So let's go to my creditors control account. So creditors control account, so we had an opening balance and we owed them 56,000 euros. Okay, so remember, this is a liability. We owe people money. That's a liability of our business. So liabilities, of course, go on the credit side. So the opening balance was 56,000 euros at the start of January. Going back to the question, so that deals with that. So I'm just going to strike that out. We've also dealt with this, so I'll do the same. Now, the next piece that we're given is details about payments and discounts, and this highlighted material is the relevant material. So we got discounts of 1,100 from our suppliers and we paid them 28,900. So that has to impact on the creditors control account. So again, if you think about this, we owe them money and we pay them money. The payments and the discounts must go on the opposite side to the liability. So we payments of 28,900 and we'd also discounts of 1,100. So both of those reduce what we owe our suppliers. So again, the accounting for that is consistent. Okay, you also have to reduce liability by debiting the liability account. Okay, so going back to the data. So we've used this piece of information. Let's strike that out. Payables were owed 61,720 at the end of 17th of February, of which 50,820 was for suppliers of jewellery. So that's a closing balance on my creditors account. So the opening balance goes on the credit side and the closing balance goes on the debit side. So closing balance 50,820. So there's a total there of 80,820. Now we're obviously short an amount on this side. We've only got 56,000 here. So the difference between 80,820 and 56 must represent extra liabilities, must be purchases. So my purchases in the period, the value is 24,820, and that's going to go into my trading account. So I'm going to switch back to my trading account. 24,820 is the value of purchases. Okay, so that gives us a total there of 103,020. Now going back to the question to see what we have now. Okay, we've used that up. Gross marginal cost is on average 30%. Well, a bit like the last time, the gross profit divided by the cost is 30 over 100. We don't have those values, so that piece of information cannot be used yet. So let's see what else we have. Cash lodged, the bank account, and cash not lodged. The two of these in total represent our sales. So that's going to be a total of 91,000 for sales. So I'll just slot that in as sales. So what we now have is the sales value and the total costs without closing stock. Okay, so these two pieces of information are now utilized, so strike those out. And the only two bits of information not yet used are, first of all, the value of stock not stolen on the 17th of February, 6,800, and gross margin on cost is on average 30%. Now, I'm hoping that at this point you understand what we need to do next. We're going to use this piece of information here, the gross margin on cost is on average 30%, to figure out the next series of values. So if I go back to my solution, gross margin, gross profit divided by cost is 30 over 100. So let's just have a look at the logic of this. Okay, so gross profit divided by cost is 30 over 100. And if we set out a template where we say gross profit is 30 and cost is 100, okay, 30 over 100, you can say that gross profit over sales is 30 over 130. And that's the key insight that is necessary to advance the question. Because we know what the sales value is. We know that the sales value in actual fact is 91,000 euros. So we can say the following: GP divided by sales we know is 30 over 130, but we can convert that into the actual data. So gross profit amount divided by 91,000 is the same as 30 over 130. And if you multiply each side by 91,000, you'll get gross profit is equal to the missing figure, 21,000. Okay, so to get from this step to that step, I simply multiply both sides by whatever's underneath the gross profit. So multiply this by 91,000, you end up with gross profit by itself. Multiply this by 91,000, you get this thing here. And on a calculator, that works out as a gross profit is 21,000. So I now know that my gross profit is 21,000. And the sales value minus the cost of sales gives you 21,000. So therefore, cost of sales must be 70,000. And the cost of sales of 70,000 is equal to this minus closing stock. So closing stock must be 33,020. It's basically a balancing value. So that's the total stock that we had on the 17th of February. But we know from the question that some of it was not stolen. The value of the stock not stolen was 6,800. So 6,800 wasn't stolen. So therefore, if we had 33,020, okay, so total stock was 33,020, but the bit not stolen was 6,800. So the stolen material added up to 26,220. There's your solution to the question. So you would expect an insurance claim in the region of 26,000 euros in respect of stock. I hope this proved useful to you, but if anybody has any queries about it, feel free to email me. Thanks.